It's good to see you all again on this day 3 and final day of the New Economy Forum, because by this time we have touched upon all of the very important topics of our day. And I think one that keeps coming up, how will we power the artificial intelligence revolution, right? And perhaps this session can give us maybe some alternatives and some deeper insight on how we could see this tech infrastructure shift. Jihan, it's great to have you with us because you, of course, head Bitdeer, and you're a Bitcoin miner, you're a manufacturer of crypto gear, and now you're an AI infrastructure provider. Tell us a little bit about how all of that works.
Yeah, Bitdeer design our own Bitcoin mining chips, and we manufacturing the Bitcoin machines. So we operate the whole vertical of a Bitcoin mining business. We believe we are the best Bitcoin miners in the world, even though right now we are still don't have the largest Bitcoin hash rate. But we will increase really fast, and we operate at the lowest cost and very high efficiency. Most interestingly, we have 3 gigawatts of power NANDs worldwide, and 2 gigawatts sits inside the United States. And this is all mostly immediately, very quickly available power that can be converted into the AI data center very quickly. And my point is that Bitcoin mining activity has been profound all the infrastructures that are required for the AI data centers, because all those transmission lines, substations, the permits, training of the labor force, and the building of those constructions requires quite many years. And right now, if you need to go to a nodal study in a certain grade, like in Texas, you require many years' time to get that load. But Bitcoin miners has already doing this for years, and so it can help the AI data centers accelerate building.
It's interesting because we haven't thought about Bitcoin mining and the connection that you could make when it comes to power generation and the infrastructure needed for artificial intelligence. But has big tech now finally awakened to the fact that you need so much energy to power all of that, and started to look at Bitcoin mining potentially as a place where that could come faster? And what is the time frame in the conversion of the facilities?
The fastest one, we need just 1 year and to fully convert into AIDC. The longer ones will need to take like 2 or 3 years.
So you have 3 gigawatts of power capacity. I believe 2 gigawatts are in the United States.
Yes.
How much of that are you thinking of converting?
I think eventually all those 2 gigawatts will be converted into AIDC. Eventually, maybe we will do it within 5 years. But at the same time, we want to develop new power lands, assets inside the United States, and we'll build up the substations and fund all those transmission lines and pivoting the lands and building up the necessary labor force for all the operating of the data centers. And possibly that we'll mine Bitcoin first before we signing up deals and convert into AIDC again. And all those buildings constructions will be dual use.
It's interesting when you're looking at these mining sites that you're already choosing, you're not necessarily seeing what power capacity is now. You're also looking at the future, as you're doing with your Alberta, Canada facilities. How would you be able to add to power generation and just own that instead of depending on utilities?
Yes, I think generally speaking, I think the North America right now is falling behind of a power generation and a power transmission. We need to add up this kind of a demand for power to incentivize the power supply of the power generations. And very fortunately, the North America got lots of natural resources, especially gas and sunshine. So I think it will be no problem for generating the power. But the important question is where there will be enough demand, and where this kind of power generation investment will be profitable for the investors, and whether we can do it quick. So right now, doing it in kind of a vertical that a power generation and a power consumption in one entity may be quite effective. We generate a power and we can mine Bitcoin first, and we can do a large investment at once, 1 gigawatt, if we can get the permission. And we can mine Bitcoin, and then with 200 megawatts, 300 megawatts, we can sign different size of deals and to convert into AI data center.
We've seen other Bitcoin miners now turn a lot of their facilities into artificial intelligence infrastructure, and that's surprising given, of course, the incredible interest right now in that sector. But you haven't gone all in. Why are you still keeping Bitcoin mining?
Yeah, we love Bitcoin mining. I have been doing Bitcoin mining since 2012. I invested, supported the first Bitcoin mining chip startup in the world. And later I co-founded the largest Bitcoin mining rig company in the world. And right now I'm doing with Bitdeer, and I want to build it into a great Bitcoin mining company. I think Bitcoin has a long-term future. I think there will needs to be miners, and we want to do it. And I also see that actually the demand for AI data centers may got some kind of uncertainty, especially in timing wise. So if we can do the Bitcoin mining at the best efficiency, that I will actually make our profitability and cash flow and the support for the supplier of such kind of power generators much better, because the power generators will worry. What if I build this capacity and you don't actually use it? You said you will do AI. What if AI?
Yeah, they're all concerned about the AI bubble.
Yeah, but if we tell them, look, we are the best Bitcoin miners, we will be sure that we can use your power, and so everyone will be very confident to invest into the heavy capex.
You're basically hedging.
Yes.
But it's such a difficult time also for mining itself, right? The margin pressures, the halving cycle every 4 years. And you have today the crypto sell-off continuing with what, Bitcoin at 86,000 or something.
Yes, you're right. There were quite a few Bitcoin bear cycles in the past, 2014, 2018, 2022. Mostly it was actually associated with a kind of constraint or tightening of the liquidity globally. It's a micro phenomenon. So I think right now we are still kind of at the beginning of easing cycle. That we'll have a lower interest and have more liquidity on the market. But recently, due to the TGA, I think it's just temporary.
Okay.
I don't think the macro situation supports very immediately and very deep bearish. But this kind of adjustment may be a little bit too harsh. But right now, Bitcoin is at the most oversold situation for many years, if you look at the charts. So I think that will not be lasting very long for this kind of sinking in price. And the competition among the Bitcoin miners has been very strong than before, much stronger than before. And the hash price also go to the lowest point right now in history. I think this is a very, very huge challenge for the Bitcoin miners. But fortunately, Bitdeer right now, I believe it's going to be the best effective miners on the market. So I think we will still doing the Bitcoin minings. And the Bitcoin minings, our return on the assets is still very high. We invest roughly more than $1 million per megawatt. And we can still generate very close to $1 million gross profit every year. So I think that's a very high return on assets still. Yeah.
So you have the cash flow just in case something happens on the AI infrastructure side of things.
Yes.
What do you think is going to happen with the AI potential bubble that people are concerned about right now as well?
Yeah, I think the problem is that within the tech industry, the investors has been so familiar with the light asset model, a very good moat, a very high profit, low assets, generate free cash flows and distribute to the investors by buying back stock or paying dividends. It's so perfect. But this round of AI revolution involves lots of capex. I think that's the investors actually, maybe they don't like it's so much better yesterday, but today you need to invest so much money first up front. And I think potentially the return on asset as a company as a whole, or the industry as a whole, considering about the return on asset, may be a little bit lower than before, because anyway you need to invest trillions of dollars of a capex within years, and it depreciates as well. But I think ultimately we need to look at the demand and the supply situation. We need to ask whether the demand is strong or not. We have been doing a very small AI cloud in Singapore. We were actually the first super cloud of NVIDIA in ASEAN region 2 years ago.
You're a preferred partner for NVIDIA.
Yes. Actually, we worried about this kind of overinvestment of AI hardware 2 years ago. So, but we know that AI is kind of a train that we could not afford to miss. So we jump on the train, we invest some capital. We already made up our mind that maybe we will lose all the investment or maybe half of the investment because of overinvestment, but we want to jump in. What we have seen that is that first, the AI model has been so much useful than before. And the model also became much, much larger than before. So each model took significantly more GPU resources to run. And people are using more and more models to do more useful things, more productive things. So combine all the effect, we see the usage or the demand for the GPUs ramping up very quickly, so quickly. And right now we've experienced some rising in price of H100. That is a very old generation of GPU. So actually people want it. And we also can look at the supply side. I think very fortunately that this for the investors of such kind of assets, that lots of countries, the major countries, Europe, US, got kind of a protection of the data. So lots of the AI computation, the data has to happen inside this region. So it's not a kind of a free trade. So which means that the supply is constrained.
I was going to ask, because you have the geopolitical sort of narrative and overlay to everything that's happening around artificial intelligence, right?
Yeah, I don't want to say too much about the politics, but I want to say that this is actually good for the investors, the shareholders, the owners of such kind of capex, high-tech infrastructure in US, in Europe, which means it does not compete against some very cheap power, cheap construction, and a very fast building speed in Asia. I think that's very important. So, I mean, the supply side is slow, is constrained. So strong demand and constrained supply. I don't see that there is a too high risk for the supply side of such kind of capex, but definitely it's not so nice than before. You need no money to do huge business. But right now, you need to invest a lot of money first. But I think AI will be useful. I think AI just can comparing with the automobile industry. People spend a few $1 trillion buying new cars. Yeah, so if people spend like $1 trillion to pay the AI computation worldwide, I think it's not so insane. Right now, OpenAI generates only a few $1 billion per year. I think that's just the beginning of the demand growth.
When we talk about capex and all of that spending and how much money it takes, is it a concern though that a lot of the companies are sort of going back and forth with capital, investing in what we've been calling circular deals?
Yeah, I think a little bit calm down in this kind of a capex, maybe it's good news for for this kind of instruction owners. I think that's actually good for us. If they build too fast, that the competition of the supply side will drive price down, will drive the returning down. I think that's actually good news. If, for example, if some crazy company if they had successfully raised a few $1 trillion from some crazy, sovereignty investors, that will be disaster for the whole industry. Maybe we should slow a little bit down. We just have a kind of schedule, wise timing, to invest a certain amount of capital, how much capital per year, and to just grow alongside the supply. The supply side just grow alongside of the demand side. Yeah, I think that's better, much more healthy for the economics, for the companies operating in this space.
Tell us a little bit about the manufacturing of ASICs as well, because that's another thing that you do. You're a crypto gear maker as well. Is there any chance that in the future there could be an overlap with AI inference chips as well?
Yeah, we design chips, and we need to do lots of innovations to be very effective in
that you can monetize or commercialize?
Yeah, right now we are trying to do a very important innovation, I believe, potentially, for all the computation-intensive chips. We are designing kind of a new family of circuits. That family of circuits will reduce the power usage very significantly by 80% or 70%, 90%, I don't know. We will see, because it involves design our own code of EDA software. That's very time-consuming. It's kind of delayed, but I still have some confidence that our team may deliver it. And then, if we can be successful, we can license such kind of patents to other GPU or TPU designers in the world to reduce the power usage on their chip. And we have also been doing very good on the traditional Bitcoin chip design. We have low problems to improve the power efficiency, even though the innovation, very innovative design methodology may got a delay, may got a risk.
So you're designing those chips, and then you're getting it manufactured by TSMC
yes.
in Taiwan.
Yes.
When we talk about all of these companies, the geopolitical risk always keeps coming up. How do you view that?
Yeah, I think we're already in kind of reality that the national security concerns for the major countries overwhelm the pursuit of the economic efficiency. I think we are already in this kind of reality. We adapt to it. So we rely on one side of the supply chain, and we operate and we're doing business on one side of the world. So that's a reality we have to accept, and we adapt it very well.
And you also have facilities in Nevada that you're expanding?
Yes, we are building up the Bitcoin mining rig manufacturing factory in Nevada. I think that's actually quite unusual back in a few years ago, because all this kind of OEM, these factories are doing Asia. We already found out it's very different. If we want to manufacture these mining rigs in US, it needs to be more optimized. We need to design more machines. Actually, some of the machines actually are a lot economic in Asia, because the labor here is very cheaper, and and it's much more easier to recruit very good trained workers. But it's very different in US. The salary is much higher, and it's hard to recruit. So those machines in US will be much easier to get the investment paying back, considering the context. So we are accumulating experience by setting up such kind of manufacturing. It hopefully can be ready at the middle of next year.
And just quickly, as we wrap up, what do you think is the major geopolitical risk and opportunity for you in the next few years?
I think the next few years, the AI revolution.
Should we just say next year, because the technology transition is so fast?
I think it will take a few years for the AI revolutions to spread really worldwide. Right now, the AI revolution mostly concentrated in United States. It's still there. But later we will see the developing countries to catch up in this kind of infrastructure. Will be the largest opportunity that those countries also lack of the power or electricity infrastructure, and we can do Bitcoin mining there. It will be good for the countries, good for pre-fund all the infrastructures. And later, if the timing comes to their country to build up AI factories in their countries, I think they will be ready much faster than other countries that are a lot of welcome Bitcoin mining.
Jihan, really good to have you with us. Thank you.
Yeah,
Thank you so
you.
much for joining us as well.